After last week's fall. Did you miss it? Was that it for the dip? Let's get to our traders in the floor show. Joining me now, two traders with decades of experience. Alan Nuckman from the CBOE and Sarge Guilfoyle. Alan, you know, not too many market dips these days to get in on the cheap, or at least cheaper than what they were. But what could give investors another entry point this week?
Well, this has definitely been a buy the dip market for 2023. Every pullback has snapped right back and made new highs. We got to 4,600, which was the technical target in the S&P, and then we saw some profit taking. Earnings were a great catalyst here. I think you have to look at the stocks and sectors that maybe haven't participated, because I don't know if we're going to get that many more pullbacks. I look at energy and I look at consumer cyclicals here that are both unchanged on the year. I think they could, bounce back, and that could provide a nice little boost to the S&P and get us to 5,000.
5,000. Okay. Sarge, Alan didn't bite on what I was expecting, which is Thursday. We get the CPI number, but more importantly, the core CPI. That, to me, is extraordinarily important here for the month of July, because it is consumer inflation. The consumer inflation number, and when you talk about core, that's X, the volatile food and energy, which, again, we know it doesn't make sense because we all need food and energy, so why not keep it in? But up 3.3% year over year. But if you're looking specifically at the core, the expectation there is to see a gain of 4.7%. June was 4.8%, so it's not really coming down. A miss or a swing in either direction could affect these markets, right?
Oh, sure. I mean, it'll impact dollar valuation. It'll impact the yield curve. We know that geopolitically driven non-core inflation has probably hit its nadir back in June. Is probably on the way back up. That's food inflation caused by Russia. That's rare earths inflation, some tech inflation caused by China. That's OPEC plus. Mm-hmm. I think we've seen some weak labor market data in the last couple of months. I think we have some uncertainties here. We're also going into, I'm not saying it's going to be a down year, but we're going into the toughest part of the year seasonally. August is typically a give or take month that could go either way. September, on average, over 25 years, has been a negative month. So we're going into a time of year when folks take money out of the market. It's one of the few times of the year where, on average, they don't put money into the market. So I think that, especially based on what we see on the inflationary data, that we could run into some hiccups here.
Okay. Hiccups, which might very well mean another entry point. But he just mentioned energy. He mentioned oil. So in a way, right, Alan, that's your language that you're speaking. You feel that this is a real opportunity. And yet we've seen crude oil jump pretty exponentially, not year over year, but right, definitely quarter to date and the last 3 months.
Yes, in the last month, we've had a nice little bounce. We're back above 80, which is the midpoint of the action for the last year. So if we just get to the top of that range, which would be $90 a barrel, that is very positive for so many of these oil stocks and the oil sector, which can boost the overall market. Nobody's going to like paying more at the gas tank, at the pump, but that could be a boost for the market. That could be another catalyst, because that's a sector that has been left behind, and I think there's great opportunity there. Even if it breaks out of that range above 90, 110 would be the target. 110 is still not really that expensive. You compare it to the record that we had in 2008, adjusted for inflation, is over $210 a barrel. So it would still be half of what that record all-time price was.
Yeah, I don't know, though. That's like telling people that in the 80s, interest rates to buy a home were at 19%. They don't want to hear that.
They
only remember the low price here. All right, guys, if there is, let's just say, a pretty market dip sometime this week or in the next couple of weeks, Sarge, what are you buying?
I'll tell you what I'm buying today. I'm buying the stuff that's not rallying today. I already bought Apple today around 177. I will buy it down to 160, which is the 200-day simple moving average. I've already bought GE Healthcare today around 75. I'm willing to buy that one down to 74. That's where support of the stock has been for a couple of months. Palo Alto Network's been unfairly beaten up over the last couple of weeks, I guess. I paid about $214 for that stock. I'm willing to buy it down to 188. That's the 200-day simple moving average. They're reporting late August. We're looking for 60% earnings growth and 27% revenue growth. It has a relative. CrowdStrike. I bought that one today also at 149, willing to buy that one down to 131, which is the 50-day simple moving average for that stock. That one also reports in late August. We're looking for 50% earnings growth and 35% revenue growth. I think the cybersecurity stocks have been unfairly beaten here. I know their valuations are a little off the wall,
Yeah.
but they're important, especially in the AI world.
And AI, let's just mention Palantir coming out. Okay, well, the bell ringing in about 52 minutes here. They come out after the bell. I believe the company has said that sometime this year they will swing to a profit. No guarantee that that will happen, but AI as a play there? Sarge?
He's talking to me or
Sarge.
Alan? Okay. Yeah, I can't be long this one myself because it's my third highest weighted stock in the stocks under 10 portfolio that I run for real money. So yes, I am mentally very long for myself, Palantir, and I'm long for the folks that belong to that portfolio. Okay. You heard what Dan Ives said about this stock last week. Okay, Dan Ives is, in my opinion, one of the best analysts we have in our space. He's in the top less than 1/4% in terms of the ratings over at Zip Ranks. He's very positive on this stock. We're only looking for about 12% revenue growth here in Palantir, so it's not supposed to be a good quarter. It's going to be what they say about their new AI platform.
Okay, and Alan, both mentally and actually, what are you long? What would you like to be long when you see a dip?
Well, I let the markets tell me, and the markets are saying that at the end of 2024, that short-term interest rates will be down to 4%. So that's 1.5% lower than we are right now. Mm-hmm. So if that occurs, the dollar's not going to strengthen. If the dollar weakens, where's that going to put us? Resources. I love Cleveland-Cliffs, U.S. Steel. I also look at like the bottom pattern that we're seeing right here in an oldie but a goodie. If you remember when it used to be in the Dow, Alcoa. Alcoa's got a great bottom base here, and it's about 60% off just last year's high.
Aluminum Company of America. All right, gentlemen, thank you very much. Our traders with decades of experience between them. You want to listen?